Hello traders, Gary Wagner here at approximately 1:30 in Honolulu, 7:30 in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is the 22nd day of May 2020, and this is the daily report for gold and silver, our weekend review. And what a week we have seen. We had a mass sell-off on one day this week, a pretty strong recovery today. And when we look at our technical studies, we're going to talk about our current trade, as well as the areas we're looking for minor resistance short term. But most importantly, at the end of the show, we are going to give you our long-term forecast. And I think you'll be surprised at how high we believe gold could go by the end of this year. But first, to the price board. There is no doubt gold had a solid recovery today, closing up about $12.80, this being June futures at $1734.70. It's a gain of about 0.75%. If you looked at yesterday's market forecast that we have on the members page, we did suggest that aggressive traders can add to their positions and also look to add going long silver. Those that did that got in roughly at 1726, 1727, and as far as silver goes, they got in much below today's gains because today it gained 32 cents at 1769. Getting in yesterday put them in below that price point. Spot gold also gained on the day, but only about 30 cents, 1734.60. You can see that spot and June are coming into alignment. Platinum gained some ground, $20 at 186.60, and palladium declined by $81 today. That at 1981.20. Let's take a look at our technical studies and talk about our current trade. On a technical basis, today's $12, $13 gain in gold was absolutely significant. It's not so much that we gained $13 on the day, it's our various support and resistance levels. And if you recall from throughout the week, especially when we saw the market sell off strongly, this was the other day, we looked at the fact that the lows that came in met our criteria at 1750. The low was 1750.30. Our stop is at 1750, so we avoided that stop by about 30 cents. Technical confirmation that that's an important number. The next important number came in just at around 1726, and that, of course, is based on a series of tops. And as you can see, today's candle was significant in that it opened just below that price point, this red line right here, and then closed above it. And that is what is most significant to me. So I'm looking at these as support levels that should hold. New support level we're putting at around 1725, and we have gold at 1734. Now, the big numbers that we really need to take out are first 65, and that is based upon really a series of tops. You can see the tops that come in at that level right here, as well as right here. And so that top needs to be taken out. We have another one that sits around 75, and of course, the brass ring continues to be 1788, which is the highest trading point of the year. I think that we'll see a challenge of this first point at 65. If we get solid bullish news next week on gold, we could easily go through there and challenge 1788. But what I am extremely excited about is our long-term projections for where gold pricing will go throughout this year, especially the first and second quarter. What we have done is we have created a basic Fibonacci extension, and we're doing an extension off of wave 3, which we mark beginning right down here at approximately 1450 and concluding right here at that top of 1788. We then take those two areas and then begin our extension from where wave 4 concludes, which is what we're marking right here. Based upon that, we're looking at two basic numbers, a 0.618% extension of wave 3 and a 0.78% extension of 3. Those numbers come in at 1877 for the 0.618, and the 78 tells us that we could see it trade as high as 1930 in that area. Also, the automatic get puts it just in the middle of our two calls, but nonetheless, what this tells me is that we most certainly will challenge the all-time record high over this next year, and I believe take that out substantially, with gold going to about $2,000 by the end of the year. My recommendation is to maintain your current long positions in gold and silver, as well as your stop at 1715. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Tuesday for the next daily update and review. For those in the States, have a healthy and great Memorial Day. We'll talk to you on Tuesday. Bye-bye.